Bitcoin is still trading at $62,000. We already hit $64,000 in the last 24 hours. So we are so close to Bitcoin hitting the previous all-time high. And the market is just pumping. I think a lot of people are in disbelief at how fast it's moving. The spot ETFs have brought so much demand for Bitcoin that it's just massively pumping the price. And this is happening exactly like I've been predicting for the last many months, with a front run potential theory here, where instead of the 4-year cycle where the Bitcoin peak of a bull market only comes about a year after the halving, which would be, the halving is in April, so it would be in April of 2025 for a peak. At this point in time, what if there is some sort of front run where things go up a lot quicker than most people expect and also top a lot quicker than most people expect? So in this video, I'm going to dive into some charts, share some more thoughts. What I'm going to share here is, of course, very important if you're invested and you're looking for a potential exit strategy of where to take profits. And it is also going to be very important if you are still sidelined, if you are not yet invested, because this is really among the last chance, in my opinion, that you can still get involved and still have a reasonable chance of massive upside. If you're new here, welcome. My name is Dirk, and you should subscribe to my channel on YouTube. You should follow my page on Instagram to be able to get more of these updates. If you want to learn more from me, if you enjoy this type of content, I run a VIP membership where I have all my courses, my trainings, my monthly, weekly, and daily updates about the market. I share my portfolio, I share my trade ideas. All of that is inclusive in one membership that I call VIP. I will be closing the doors to that on April 8th. So if you want to join, the sooner you join, the better, because the higher the markets go, the less chance there is for upside and the higher the risk becomes. So the sooner you join, the better it is. VIP doors close April 8th, but I recommend you jump in as soon as possible. The link is in the description down below. There is no risk because there's a 60-day money-back guarantee. Let me help you navigate these markets with over a decade worth of experience trading financial markets and being full-time in these crypto markets since 2017. All of that is available in VIP, so the link is in the description down below. I hope to see you on the inside. All right, so diving into the chart here, this is the Bitcoin daily chart. You can see here we're at $62,800. What a run up this has been. And this is, again, nothing new. Because if I change this to a 3-day chart, this is what caused me to be bullish. We got the 50 simple moving average over here. It caused me to be bullish at the beginning of January 2023 when we reclaimed this 50 moving average on the 3-day chart. You can see right over here, this was the bull signal. This is where I said, guys, the bull trend is back, probably for weeks or months until we lose that 3-day 50 moving average. Because you can see this is one of the best indicators. Here in the previous cycle, when we got above it, look at that, the whole bull market stayed above it. When we lost it, that was the sign to get out. And here for the 22 bear market, when we lost it at 52,000 about, you can see it stayed below for the whole bear market. So the sign to get in was only once we reclaimed this 3-day 50 moving average. And that is how I was able to turn bullish at the beginning of January 2023, more than a year ago, when most people were still bearish and most people didn't believe it. And look where we are now. So that took us from 20K to 60K, purely based on the chart, purely based on technicals. This is how I do my analysis. I believe everything is based on price action and technicals. And if you know how this price action works and you understand what to look for, then it allows you to make much more accurate, high probability analysis and predictions. Of course, nobody knows the future, nobody knows for sure, but price does behave in repetitive ways. There are only certain things that a price can do, and whether it's a 5-minute chart or an hourly chart or a weekly chart, all the patterns, all the price movements behave in very similar ways. So you can see over here, we have stayed above this 3-day 50 moving average. And as long as we stay above it, the trend is bull and we continue higher. You can see the same thing happened here in the 2021 bull market all the way up. Only once we lose it, that becomes a danger sign. And at this point in time, you can see that 3-day 50 moving average is at $41,000. So at this point, if we drop below 41,000, I would call the end of the bull market. But that is so far away at this point. And all the time that it stays above this, it obviously keeps rising every 3 days. So the longer that Bitcoin can stay at 60K or 70K, the higher this 3-day 50 moving average becomes, and the higher your kind of stop loss or line in the sand for the bull trend becomes. So as that moves higher, maybe it goes to 50K, well then the line in the sand for the bull trend is when it drops below 50, then that is where potentially to get out and start looking to take profits. So if you want a reliable indicator, something to watch to help you determine when is the bull market over, this is a very good one to add onto your charts, the 3-day 50 moving average. When we lose this moving average with 2 consecutive closes below it, it is very likely the trend is reversed and the bull trend is over. Now, of course, there is a massive distance between 63,000 and 41,000. Okay, so it's not going to give you the ultimate top. But as you can see over here, in the previous bull cycle, when we lost it, it could have still saved you a lot of money, right? Even if you've gotten out about 50,000 last time. Okay, the top was 70,000, so that's obviously a big drop to it. But from 70 to 50, if you would have gotten out at 50, it could have saved you the entire drop down all the way to 20 or maybe even 15,000. So you could have saved yourself more than 60% downside simply by, worst case, getting out below the 3-day 50 moving average and then getting back in when it got back above here in January of 2023. Now, of course, there will be a ton more other signals, technical things to watch that will allow you to hopefully get out a lot closer to the top than having to wait for a drop below the 3-day 50 moving average. But this is a really good way to look at these charts. Now, look where we are right now. The all-time high is literally just, it's $6,000 away, guys, at this point. We're at 63 as I'm recording this. The top was 69,000 over here, okay? And that is very, very close. I mean, that's probably just 1 or 2 days away if this ETF bid keeps on going like this. So they might actually continue to push this all the way up to the all-time high before we see it drop. But when it does drop, we will get pullbacks, we will get corrections. You can see I've marked this here on the chart, and this was a $12,000 drop. This was a $15,000 drop. This was a $10,000 drop here on the way up, okay? So we will see drops of $10,000 or $15,000, and that will not be the end of the bull trend. We will see that drop, and then we'll see it go back up, and we'll see that drop. And that can be scary, of course, especially if you're using leverage. That will get you wrecked if you don't know what you're doing, if you're over positioned. So do not overextend. Do not go all in with leverage. Always, when you're trading with futures or leverage, you have to manage your risk. Okay, you have to take a 1% loss or a 2% loss. Worst case, if you are wrong, you cannot go in with your whole account because you will get wrecked on these massive, massive drops. However, if you are prepared for them, they do give better entry opportunities. So if you still have capital left or you're sidelined and you're waiting for a timing to get in, wait for one of these scary drops, and hopefully that gives you an opportunity to get in at a better price and then see immediate upside continuation. So look, I want to show you guys something cool. If you don't know about this yet, Wyckoff. Richard Wyckoff was a mathematician. He basically really dived into the technicals of how markets work. And he came up with this framework that basically markets are designed to constantly bait retail into putting their money into the markets at the worst time. Then the market dumps and the retail sells their bags at the worst possible time at the absolute capitulation over and over and over again. This works with stock markets, it works with housing markets, all sorts of cycles, also in crypto. So basically he came up with the theory that the market is basically, if you see it as one person orchestrating the whole market instead of millions of individual participants and computers and bots and all that kind of stuff, see it as one person who kind of orchestrates the whole market movements, then the whole idea behind these markets are to constantly manipulate and exploit human psychology and emotions to be able to get retail investors and possibly also institutions and funds to really get in at the worst possible time and then get out at the worst possible time and basically just hand over their money to the smart money who basically runs this, okay? So what they do, and he has this schematic over here, is that you get these different areas. So you get an area of accumulation, you get an area of distribution, you get a markup and a markdown. This is a very simple way to explain a market cycle. So accumulation area usually happens after the capitulation. So take, for example, at the end of 2022, FTX collapsed, the whole market was way down, everyone is super, super scared. That is the exact time when most of retail sells their remaining investments for the biggest possible loss, 80-90% down. They get out of the markets and they hate the markets. They accept their loss and they've just lost tons of money. During that period, we usually see in crypto 1 to 2 years of accumulation. This is when the smart money and the whales, they start accumulating crypto. Okay, over a period of many months, the market is super boring. Everyone who panic sold the bottom, they start getting out. Everyone who panic sold the bottom, they lost interest, they left the market, they don't look at it. But in the meantime, over a period of 1 or 2 years, these whales accumulate. Once they have their bags loaded up with massive amounts of capital, we start the markup phase. And again, this is completely not done by retail at all. This is the smart money who start to bid higher and higher and higher. You can call it manipulation, whatever you want. And obviously, as the price continues to move higher, then we go through the various phases of the cycle where eventually the price gets high enough and close enough to the previous cycle peaks that retail starts getting interested again. And you go through the whole motions of disbelief and this is a fake rally and so on and so forth until eventually it keeps going high enough till everyone decides, okay, bull market is back, we're diving straight into this, we're going to make tons of money. And that's when you start getting retail getting in again here towards the end of the markup phase. And that is when things are overbought. That's usually near the top of the bull market. That's when you see the headlines all over TV. You start seeing your influencers talk about it. Everyone is bullish again on crypto. For example, what we're starting to see right now. And then you get the distribution area. So this is the phase where retail starts getting bullish. They only started FOMO in after they missed the whole ride up. And remember, most of them got liquidated or panic sold at the bottom. They missed the whole ride up. And now they start getting interested, thinking it's going to go a lot higher. At this point, the whales and the smart money who have accumulated, who are already way up, now they can start distributing, meaning they can start selling slowly, obviously in increments. This takes a long time, this distribution process, because you can't just go and dump hundreds of millions of dollars worth. Like imagine Michael Saylor, who's been buying, who's way up now, billions of dollars. He can't just market sell all his positions because that would tank the entire market. So what happens in this distribution area is usually it's a period of weeks or months where the price stays high, it kind of chops around, and this is where retail continues to FOMO in. So as new money comes in and new liquidity comes in, the smart money can use that to offload their bags. So they're basically dumping their bags while retail is buying those bags from the whales. And eventually, once the whales have done selling and there's no new buyers, there's no new retail, then there's obviously no more buyers left. Sellers start coming in, they start selling, and it starts the process on the way down. That is the markdown, and that is where retail gets caught holding the bag. They get wrecked, and eventually the cycle just repeats over and over. So in a nutshell, that is basically the crypto boom and bust cycle. It is overall a market cycle. It appears in stocks, in other markets, obviously in a much longer time frame. In crypto, it moves a lot quicker. But this is how it happens over and over. And you should be aware of this because this is going to happen once again. So once the bull market gets high enough, we're going to go into some sort of distribution and we're going to go into another bear market. So you want to try and recognize this. Obviously from the charts and from other signs, people being too euphoric, social media too much, etc., then you want to get out also during this distribution area. You do not want to get caught holding the bag all the way down through the next bear market because it probably will all go down 70 to 99% again. Bitcoin maybe 70%, altcoins maybe 99%. So I want to make you aware of this now. I don't think we're in the distribution area yet, but be aware of this. And now that I've explained this, let's go back and look at 2021 so you can see this in action and then you can be more prepared for when you can start selling. So you can see over here on the Bitcoin chart, now we're looking over here. And if I zoom in, you can clearly start to see what happened here. So we had the whole 2018, 2019 bear market, that was the accumulation. We had the markup phase. Everyone started getting interested in crypto like 40, 50K. But you can very clearly see here, this area here with these three thrusts, this is just the distribution process taking place. So this is where retail gets the most bullish over here, and this is where the smart money and the whales are starting to distribute and sell. And you can see that was over a period of basically over 2 months where retail kept coming in and kept buying and smart money was selling, and then eventually when it was done, it rolls over and we got the sell-off. Now, 2021 was interesting because we had this double top scenario where after the initial sell-off of 50%, we ended up getting a slightly higher high, and then again, you can say maybe that was a second batch of distribution, and then we went all the way back down, and the process repeated here, where we had this period over here, of accumulation, and now we are clearly in the markup phase over here, as you can see. So at this point, I don't know how high Bitcoin will go. It's likely we're going to take out this high of 69,000. I think we will go to new highs. The question is going to be, how high does it really go? Does it become just a sweep of the high and then a drop back below and drop back down in some sort of front run scenario where maybe by April or May we hit somewhere between 70 and 90,000 and then drop back down? Obviously the trigger would be for this to go above the previous high and drop back below it. At this point it would be a warning sign. Okay, we could also just go above it and then continue going higher after the halving. There is a possibility that, of course, we keep going up after the halving for another 6 or 12 months, as we have in past cycles. Now, this is not something that I'm leaning towards right now. I'm leaning towards some sort of earlier peak, but I'm going to be flexible and stay open to the idea that maybe, yes, we do get continuation. Maybe the cycle does repeat. Maybe these ETFs that got approved are so bullish that the demand for Bitcoin is so strong that we do see continued upside. But I want to take it one step at a time, 1 week at a time. Let's see what happens by the time of the halving, by April. Let's see where we're at, and then let's continue to follow the charts. Like I showed you earlier in this video, the 3-day 50 moving average is key. Market structure is key. There's a bunch of other technical stuff. I'm not going to get into that in this video that I'm watching for a potential top. And as long as the trend remains bullish, I'm going to stay bullish. But once we get the technical sign that the trend is over, I am going to flip bear. And that's all what I share inside my VIP. Literally on a daily basis. All these concepts that I'm sharing you here in this video, I teach that inside VIP. I've got a full 60 lesson course in there breaking everything down. So if you want to learn more, if you find this interesting, come and join in VIP. The link is in the description down below. There's a 60-day money back guarantee. There's no risk. And I pretty much guarantee that you will find it valuable and that maybe it can change your life and your finances completely. If not, you can get your money back within 60 days. So the question is going to be, okay, we take out the high, what happens next? Do we get a sweep and a drop, or do we see a continuation higher? And that still remains to be seen. Now, as you can see over here, this is CoinGecko. You can see the top gainers here. For today, we are looking into the double digits here for many, many coins. And this is nice to see. You can see the 7-day gains over here. Some of them are already in the 100% over here, others in the high double digits. And what tends to happen is that after Bitcoin has had an enormous pump, that money rotates into Ethereum and altcoins and meme coins and maybe NFTs. So we're at the point here where Bitcoin is $63,000. Okay, what is the potential upside? Even if it does a 2x at this point, we are looking at $126,000, which would be absolutely insane already. But that's just a 2x, meaning if you put in $10,000, you get to double it to 20K. Sure, that's nice, but that's far from going to be life-changing. Whereas if Bitcoin does a 2x and goes to 126K, I think altcoins are going to do 5x, 10x, 20x, 30x, 50x. So the opportunity is clearly in the altcoins at this point. And more people will start to realize this, like for me and making these videos, sharing this with everyone, retail investors also coming in and being like, hey, I'm not going to buy Bitcoin at 63K. Why should I do that when I can buy altcoins that are less than $100 million market cap that have the potential to do a 10x or a 20x, right? There's still risk involved in buying Bitcoin. It can still drop 70%. So if you are going to take that risk anyway, then why not take a bit of a risk on altcoins? Because let's face it, that's mostly how retail thinks anyway. It's risk capital. You could throw in a couple grand or 10 grand or 20 grand or 50 grand, whatever it is, that's risk capital. And people want the most upside returns. And during these bullish conditions, that is completely possible. So I still think we are going to see massive upside in altcoins in potentially the next 4 to 8 weeks leading into the halving. And that is still where the opportunity is, in my opinion. If you want to learn which altcoins I'm buying, my own portfolio, the low cap gems that I'm betting on for this cycle for the next couple of weeks, come and join me in VIP. I've got reports on it. I break it all down for you. I've got training on that inside the membership. The link is in the description down below. And like I've said, there's a 60-day money back guarantee. If you're not happy, then you can get your money back. But really, this is the time to act. That is why I'm making these videos every single day at this point. Because at some point, once this bull cycle is done, once the distribution is done, it is all going to go way back down again. And we're probably looking at another 1 to 2 year bear market. When that top is going to be, I don't know. It could be in April. It could be in May. Maybe it runs until the end of the year, until November. That's a possibility. But one thing is sure, the higher it goes, the lower the upside potential becomes, the higher the risk becomes. The longer you wait to get involved, the less chance you have of making gains and being profitable, and the higher your risk becomes of buying the top. So get involved now. Join me in VIP. The link is down below, and I will help you navigate the rest of this bull cycle. Thanks for watching, and I'll see you in the next video.